But considering we're in an overall bearish environment, and even on the day time frame, our bias is technically bearish below 57.91 quarter to 58.02 quarter, we will now need to exercise more caution even at initial support. Now, in order for the market to put in a sustainable breakdown below initial support, we will need to see clear signs of initiative selling. So we'll need to see broad market weakness and sustained downside momentum, with the other markets heading lower as well. And in order for the market to really liquidate and accelerate to the downside, ES will also need to take out 57.25 to 36.5. And considering we have the employment report out tomorrow morning, we do need to be cautious on the possibility of a false breakdown attempt below initial support. So one scenario that could take place is that the overnight weakness remains in play below the micro bull bear. We go down into initial support, and of course, because it's a bias confirming zone, by default, we have to anticipate that buyers can be active there, but at the same time, there's also the possibility of a failed breakdown. So we may break below initial support, find buyers at 57.25 to 36.5, and then put in a reversal back above the broken initial support zone. Now, in order for it to be a failed or false breakdown, we will need to try breaking below it and then reverse back above the breakdown area. So that's something that we will need to assess in real time, but I think it's good to have a bit of a heads up that it's at least a potential scenario that could play out. And in the event that the breakdown is successful because it's happening on big and sustained downside momentum, and ES takes out initial support and 57.25 to 36.5, that would trigger a bearish confirmation. At that point, bearish time frame alignment would be in effect, and on the downside, the market would begin exhausting the range potential by the time it reaches 57.02 quarter to 12 quarter, and then we have the range extreme at 56.64 to 72. On the upside, a breakout above 57.91 quarter to 58.02 quarter would be the earliest sign that buyers are attempting to regain control on the day time frame. It doesn't mean that that control has to persist because we are in a bearish environment, but a break above the 57.91 quarter to 58.02 quarter is needed to even get the initial indication that buyers could be regaining control or trying to regain control on the day time frame. That can then push the market up into 58.08 to 17, where sellers may still be active, and then we have the initial resistance zone at 58.2875 to 34, where the sell side could be active on first test, and then above that we have the overnight balance breakdown area at 58.38 to 44 quarter, where again sellers may be active on first test, and whether we take a short setup at initial resistance or at 58.38 to 44 quarter will depend on the real-time intraday situation, because yesterday marked an inside day, and so far the overnight session has been balancing within yesterday's range. So we're starting to see a pattern of continued inside bars, and until we break out above 58.49.5 to 53.5, the intraday bias is going to remain neutral because there won't be any structural change until we take out something significant. And that's why in the recaps from the last couple of days, we've talked about how in order for the bias to turn bullish, ES needs to take out 58.75 to 84, and that hasn't happened yet. So today could be a more challenging day to trade because you're really going to have to be focused on how the real-time intraday patterns are shaping up. And as we discussed in yesterday's recap, when you have higher volume and higher volatility, you also have a faster pace of real-time pattern creation or development. And that means you need to be much more quicker at reading those patterns and understanding how the intraday structure is changing. So as far as bias changing or bias confirming zones go, the bias changing resistance is still up at 58.75 to 84. And on the downside, the bias confirming zone is still at 57.39.75 to 50.75. And all the zones in between don't really affect our directional view or bias in any notable way. So even though we have initial resistance at 58.28.75 to 34, it is not a bias changing zone. And that's what can make today even more tricky to trade. So I would say be more selective today, be more careful today, and if in real time you're not able to assess which side is really in control or which side is showing dominance, then it's better to stay put and not take a trade today rather than get involved at aggressive location and then get run over by momentum, because this is a high momentum market environment. And until we get either a proper breakdown below initial support or a proper breakout above 58.75 to 84, we are still in a very balanced and sideways type of market.